Hello and welcome to another update video about ADA. Yeah, ADA continues to be this descending wedge pattern that we talked about, continues to be possibly in this fourth wave correction in which ADA has been moving since December the 9th when this third wave finished. So there is currently nothing new really structurally that we could really talk about, but let's still dive into the microstructure. But first of all, I want to just make sure everybody's on the same page. This structure that started an uptrend in June last year is what probably counts best as a three-wave move so far, in possibly a leading diagonal or even an ending diagonal in a more bearish scenario, in which this would be basically a C wave. Okay, that would be bearish, and then we could still come down to new lows afterwards. But in a leading diagonal, 5 waves up and then 3 waves down would give us a bullish setup for a third wave rally afterwards. But first of all, we need to get that fifth wave to the upside in what could be a wave one. Yeah, so either way, one more high is still what I'm watching for, in both a bearish ending diagonal, because it would lead to another low afterwards, basically another bear market low, but also in a leading diagonal, we need one more high. So diagonal patterns are 5-wave structures, and I have to say this is currently likely a fourth wave pullback, because a wave 1 topped here in July, a wave 2 bottomed in September, the wave 3 topped in December, and the wave 4 might have bottomed, but then I haven't got the evidence for it. So let's zoom in. First of all, when we zoom in, we see the structural support as well as Fibonacci support levels. They are more important for Elliott wave. So what are the Fibonacci support areas telling us? Well, they tell us that there is good support around 44 cents. It's the 38.2 retracement, and it's also a Fibonacci extension level. There's a good overlap, some confluence there around 44 cents. Then the 39-cent level is the next main level of support. We have a little bit of support above that at 40.8 cents. But yeah, below that, it's going to get difficult. There are still some support levels, but ideally for this current structure, in which we're in a fourth wave, I would like it to hold at the very least the 39-cent level, basically the 50% Fib level, but maybe it doesn't even need to go down that much. Yeah. So the structure currently is what, well, counts best, a WXY structure, and we could be in this Y wave, and this might be an A wave, a B wave rally, and a C wave down still to come to, yeah, maybe 40.8, 39 cents. Do we need that? No, absolutely not. It's possible that this overall correction finished here on the 23rd of January. But the move up is not very convincing. I shared with you in the last video, we have a descending trend line here. And it takes a sustained break above the trend line first. That would be possibly a bullish signal. What is more important than that is a 5-wave pattern to the upside, and we don't have it. We don't have it yet. We only have 3 waves up. As you can see in yellow, it still takes one more high above the 53.7 cent level. That needs to happen. It's not there yet. What would be an ideal target for that fifth wave? So what we can do, we can take the length of waves 1 through 3. We go to the low of the wave 4, and we usually would look at the 61.8 extension level. That would be my minimum. In this case, it's at 54.2 cents. Then we might give it the benefit of the doubt that it has formed 5 waves. It would be a shallow wave 5. It wouldn't be very clear. Better would be the 78.6 extension. In this case, it would give a little bit more of a healthy, fifth wave. And that is actually at 55.9 cents. But we'll see. It's somewhere between 54.2 and 55.9 cents. That would, to be honest, that would be ideal. Okay, so then you'll say, okay, 5 waves, what's the benefit of that? Well, the benefit is that I can really only highlight and confirm that a low has formed in this wave 4 correction, which started in December, if we get 5 waves up. 1, 2, 3, 4, 5. That's at least the first step, yeah? I need 5 waves, and then I can work with these and give you a micro support area for the subsequent pullback, which would then be expected. We can then call it a wave 1 to the upside, a wave 2 pullback, and the third wave could then happen later. Yeah, I mean, there are still other ways how it can form a larger B wave and still come down, but that would be the next thing to focus on. At the moment, all I see is a 3-wave move up, and this still has to clarify itself. So literally, we are in the same situation as yesterday. Good to see, however, that this micro support area was respected, and the price did hold here this golden ratio level. I provided this micro support area a few days ago and highlighted, okay, to give the yellow scenario a chance and to keep it alive, we really want to see it hold that 61.8 retracement at 48.7 cents. And yeah, it did hold. It's reversing, but it's now fighting with this trend line. That would be the next step for the bulls to get above and then to take out that swing high and the targets for the wave 5 I gave you. If we now witness a break below 48.7 cents, well, yeah, then it topped in 3 waves and we come down as labeled, basically. Okay, and I mentioned in previous videos, I'm going to continue to assume that this correction is unfolding until I see a 5-wave pattern to the upside. That's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.